Bobby Turner is the CEO of Turner Impact Capital, a fund whose mantra is profits with a purpose. He's with us live on set once again today. It's nice to see you again.
It's good to be back, Scott. Thanks
big day for you yesterday. Up in the Bronx, a charter school, 800 kids. You did what'd you do, the ribbon cutting?
Yeah, we had a ribbon cutting. Andre Agassi and I were up in the East Bronx yesterday building an 800-seat K-8 public charter school for some of the most underserved kids in the state of New York. We built a school that is going to empower them to achieve their dreams. They would traditionally have been relegated to a public school where the likelihood of them graduating at level proficiency would have been 20%. The Grand Concourse Academy has been in business for 14 years, 100% graduation rate, and 75% of their kids are proficient at grade level.
103 public charter schools serving more than 55,000 students, 7,800 affordable workforce housing units you've done for 13,000 residents, 15 state-of-the-art community-serving healthcare facilities for 44,000 low-income residents. What's the return on the investment, and how do you measure that?
Well, let's start with it's a market-driven return, but let's talk about today. We're sitting here talking about records with a market commentary. The stock market's at an all-time high or near all-time high. The employment rates are at a near all-time high. But I think as business leaders, we also need to talk about other market indices or the social indices that are also at all-time highs. Today in America, we're sitting with 40 million families on food stamps. We have 22 million families who are rent burdened, spending upwards of 60% of their income on rent at the expense of food security, health security, and retirement security. We have 1.2 million kids dropping out of high school every year. These are daunting challenges, but daunting challenges can generate some generational investment opportunities, and that's the business we're in. We're trying to tackle the social injustice that comes from the failure of government delivering a fair and level playing field for upward mobility. So we built Turner Impact around the idea that if we invested in education, healthcare, and housing, and we could drive fair market rate returns, we could really drive sustainable, scalable, and yes, profitable change.
Is financial returns still the most important metric? I mean, you're helping people change their lives. You're trying to make a profit at the same time. How do you weigh the two in the way you think about it?
Well, they don't need to be exclusive. I mean, I think the traditional investor will always assume that if you superimpose a societal metric on a financial return, you'll sacrifice yield. But I can refute that with 25 years of experience showing that if you do impact investing correctly, you can drive actually better risk-adjusted returns for investors because the underlying demand for the services are less correlated to the broader indices. When the markets go up or down, nothing happens to the demand for affordable housing. Nothing happens to the demand for charter school seats. Nothing happens to the demand for quality community-facing health care. So you can actually drive great alpha for a portfolio rather than take the risk associated with the beta that comes with market-driven solutions.
We met, gosh, it must have been at least 10 years ago, around Magic Johnson, who was one of your partners as well. So you were sort of early on the curve of where all of this has gone. Where is impact investing today relative to where it was when we first met?
So I think we actually met 15 years ago.
It was a long time ago.
It was a long time ago. The market is still as it is in its infancy. It's the idea of social impact investing is beginning to get some traction. By last accounts, it was approximately $20 trillion of money earmarked for ESG or SRI, socially responsible practices. But the vast majority of that capital is being placed in what I would call passive mutual funds, where they're using social impact as a screen to either divest of bad companies or a screen to curate a portfolio of good companies that built into their corporate ideology is that they're employing socially responsible practices. And that's a challenge in itself because none of those funds actually deploy capital to actually directly tackle some of the injustices that we see from social determination.
This is an important place for you these days as well.
Yeah, I'm really focused on the governance side, so I've done a lot of work on ESG, and it's going mostly to sustainability. So they say social, they say, environmental, and they say governance, but it's sustainability where they're focused on. And they're not really, I find they're not focused on social impact as much as they should be.
For sure.
And actually, to a very minor extent, that's the least I hear of it, when talking about that. But 26% of all fund assets in the U.S. are now in ESG funds by some extent, and 40% globally. Europe's led, but again, sustainability. My question for you is, though, give us an example how it works. So charter school you're talking about.
Right.
How does that generate profits for your fund?
So let's talk about the charter school space. Today, there's 1.2 million children on a wait list for a great charter school. And that to me is disheartening, because that means that we are deferring the opportunity for these children to have an opportunity to achieve. If they don't go to a charter school, oftentimes they're relegated to an underperforming public school district. A charter school is a public school, but unlike the public school districts that don't pay for their facilities, every time a great charter school like Success Academy or like the Grand Concourse Academy that we built yesterday in the Bronx, every time they want to expand their footprint, address the needs for thousands of kids, they've got to cobble together philanthropy and or capital to build their own facility. What Andre Agassi and I do is we are a turnkey solution for those great educators so that they can focus on instruction rather than construction. We build an amazing state-of-the-art, environmentally and learning-friendly facility for them. We enter into a long-term lease, a 30-year lease for them, and they pay us rent. So we make money on them paying us rent. What we also do is we're a bridge to ownership. Having been a landlord for 30 years of my life, I've realized the only person that creates wealth in the landlord-tenant relationship is the landlord. So what we do is we empower our schools. Once they have 4 or 5 years of both academic and financial performance, we provide them the opportunity to purchase a school from us by accessing cheaper cost of capital. They're nonprofit organizations. They can access capital in the municipal bond markets. So we have actually built into our business model a built-in incentivized exit strategy, and that creates a turn for our portfolios.
I can't help but think about the debate as we're having this conversation that's now out there about capitalism and the future of it. And we have a wall that our viewers are going to see now that we made. Is capitalism dead? And you can see what these well-known people are all saying about it. Needs sustainable capitalism, says Mark Benioff. Lloyd Blankfein, capitalism must be fair. Elizabeth Warren, running for president, remake capitalism. How do you think about capitalism today in the context of what you do?
So I think capitalism is sick. I think it needs to be infused with the responsibility and the recognition that business needs to be a force for good. For no other reason than to recognize that the government is failing to provide the social safety net for upward mobility. And I don't think we're suffering from the disparity of wealth in this country. Now, it's more extreme than it's ever been. But what I think we suffer from is the disparity of hope. I don't think that poor people hate rich people. They would like to become rich people, but they begin to hate rich people when the opportunity for upward mobility is foreclosed from them.
The attack, if you want to call it that, on capitalism is too extreme? Is that what you think it is?
I think it's too extreme, but I do think that capitalism will be held accountable by the greatest form of activism that we've ever seen. You see today companies are now incorporating socially responsible practices, not because they necessarily want to. You saw the Business Roundtable a number of weeks ago come out and say we need to redefine what a corporation is. It needs to not only be for the values of shareholders, but also of employees and the communities. Is that proactive or reactive? I think that was reactive because the reality is both shareholders and consumers are now demanding. There's been a paradigm shift in values, and consumers, the new form of activism is shopping. They're supporting brands that they believe are representing their values, and they're rejecting brands that don't. Budweiser beer at the Super Bowl ran a commercial that said Budweiser beer is now brewed using wind energy. I don't know that that makes Budweiser or alcohol a noble product, but by employing an environmentally responsible or conscientious supply chain, that is more attractive to today's consumers.
Or Tom's shoes.
Or Tom's shoes.
Do you think you would have...
That makes this last.
Yeah, without capitalism, would you have charter schools?
The answer is yes. We need charter schools because...
No, but I mean, if capitalism didn't exist, would you have charter schools?
No, you wouldn't.
And you're alluding to those who have made well for themselves in our system of capitalism and have made charter schools possible.
I think charter schools would happen because charter schools are based on philanthropy.